Good morning. My name is Paul Hoffland. Welcome to another midweek market update. I'm going to have David come back in, kind of give us an update on what's going on in Iran, how it might affect not only the stock market, but the fixed income market. We do have a seminar that will be both in person and virtual next Thursday. There should be a link at the bottom of this email if you would like to attend that seminar. Thank you for your time. Look forward to talking to you soon.
Hello, everyone. Another happy Wednesday here to update our clients on what's going on in the market. Before I get rolling, do want to make clear we had a kind of live Zoom meeting for folks. We did record it talking about what's going on in the Middle East. Won't spend too much time on this meeting about it because we dedicated a good amount. If you are curious about our thoughts on what's going on in the Middle East, I encourage you to go watch that video. This week, a bit of another game of ping pong. Markets in the last week are down about 1%, albeit it was down 2% starting yesterday, did recover some. Week to date, we're down about 1%. Year to date brings the overall market, the S&P 500 to about break even. International took a good walloping, down about 7.5%. And in some other fun news, Paramount won the war for Warner. Its reward, it has received a junk bond rating from Fitch. Netflix, who lost, popped 20%. Epic Fury did go live over the weekend. I'm sure most of you know that. In terms of sheer capacity, military numbers are coming out roughly twice the size in terms of strikes and explosive volume than the shock and awe of 2003. So a lot going on this week, and happy to dive right in for you folks. We'll jump right into the war with Iran. Again, we'll do this very high level. Encourage you, if you want more details, to view the video of last week. But the war with Iran, Operation Epic Fury, did send investors fleeing to safety. This is something I love to point out. There's been a little bit of a movement, international markets rising, sell America, something that folks have been talking about. The world flocked to the US dollar. US dollar and gold saw significant bumps when the war kicked off. Gold has since retreated as some fears have calmed down, but the US dollar did see a good spike. All eyes when it comes to this conflict, financially speaking, how it relates to your money, is with the Strait of Hormuz. Oil is a big deal. 20 million barrels of product flow through that strait every day. About 20% of the world's oil flow through. There is some anxiety. Maersk has been rerouting ships, and there is a little backlog. The question is, how long will this last, and how long will that strait be somewhat blocked? Currently, there's about 3,000 containers in line waiting to cross the strait. The U.S. military has said that they are willing and able to help ships cross and defend them to keep things flowing. But if this is a prolonged conflict, this could lead to a bit of a pinch in terms of oil, which flows into everything from not only what you pay at the pump, but energy costs, and touches everything we buy every day at a global level. That is what investors are currently watching very closely. A lot of questions I've been getting, well, David, the U.S. is the largest oil producer in the world. You're right, but shale is not emergency reserves. Shale is very difficult to get to. It's not a flipping of the switch. It takes 2 to 3 quarters to get shale rocking and rolling. We do have an emergency stockpile. Currently, analysts estimate about 20 to 23 days of supply. There's also pipeline constraints. How much access we have to that is determined by pipeline capacity. So with that, we do have some options in terms of if we are in a pinch with oil, albeit not to make up enough for what's going on with the strait, which is why we are closely monitoring what really boots on the ground generals in Washington is saying, how long this conflict will last. If it's days, this should not affect oil markets. If it prolongs to weeks or many weeks past the 3 to 5 that Washington is estimating, that could have a trickle-down effect to the overall market. So that is what we're watching closely when it comes to your money and this conflict.
3, 2, 1.
A couple of other things that we are watching are the bond markets. With this geopolitical tension, the 10-year is down to just under 4%, down about a quarter point from where it usually is. In short, fears of this geopolitical tension trickling into inflation, with that oil pinch sending inflation higher, forcing the Fed to make some moves. Municipal bonds have had quite the sell-off in response to this as well. Again, everything is dependent on how long this conflict lasts. We are in an offensive position. We are not overly concerned at this point in time, but we are absolutely monitoring this situation. And if we need to get into that defensive posture, we absolutely do that for our clients. We're here to protect when the time is right. By all means, if you have any questions at all, do not hesitate to call myself, your advisor, and they're more than happy to deeper dive any of these points with you and go a little deeper should you desire. Again, we appreciate you. We appreciate your business, and very glad for the opportunity to update you on what our investment committee's thinking, and look forward to more conversations to come. Thank you, Paul.